But margin investing isn't as popular as short selling. You probably have heard about this term alongside Tesla, because these two words go hand in hand. While most beginner investors try to make money by predicting which stocks would rise in value, some professional investors make money by predicting which stocks would fall in value. It's not as confusing as it might seem. Stock prices jump up and down for one reason or another. Poor quarterly reports or any other negative news can drive the stock price down. Let's say Apple's stock price is $100, and tomorrow Apple is going to release its quarterly reports. And based on your analysis, it had a bad quarter, so the stock might fall. You borrow 1,000 Apple stocks from your broker and sell them for $100 each, or $100,000 in total. Now, you have $100,000 in your pocket, but you still owe your broker 1,000 Apple stocks. You use that $100,000 you earned yesterday and buy 1,000 Apple stocks for $80,000 since the stock price fell, and return them back to your broker. Without using a single dime out of your money, you have earned $20,000 on a fall of a stock. Investors use this strategy all the time, especially with stocks that are more volatile, such as Tesla. That's why whenever you heard the news that Tesla stock has risen, there will always be an investor who will short it. Although on the last occasion, investors lost millions of dollars since Tesla stock kept rising. Short selling isn't just practiced in the stock market, it's much more popular in the foreign exchange market, or Forex in short. It works in the exact same way. However, in this case, instead of borrowing stocks, investors borrow currencies. The nature of currencies is that they fluctuate much more than stocks, especially due to geopolitical factors. The man who mastered Forex deals is George Soros. We have already covered that in a previous video, which link you will find in the description. But here is what happened in short. Back in the 1990s, Britain was suffering economically. It had to devalue its currency, but it couldn't since it was artificially hedged against other European currencies. But George Soros realized that sooner or later Britain will have to leave the ERM and devalue the pound, and shorted over $10 billion worth of British pound. When the British pound finally was devalued, Soros netted $1.2 billion. Leverage ratios could go as high as 1 to 100 in Forex, which means you can borrow $100 for every dollar you put in. But the competition is fierce, since you will be competing against huge financial institutions such as central banks.